went long at $83.03 with a sell stop at $81.55. We do anticipate a pulse wave on this one. I'm not recommending a stop and reverse on this one just yet. I think I'll do a follow-up video on it, going over some additional analysis. But you can see here that it is in an uptrend, full-blown uptrend. Okay, so 83.03 long, 81.55 stop loss. Got to protect yourself. Next one, DBA, going long at 26.36 with a stop at $25.97. This one's a pretty tight one. Some of these you'll see that the entry prices and the stops may have a pretty good distance between them, and that's because the system is anticipating volatility. Other times you'll see that it's really tight, and it's really tight for a reason. You don't want to extend those stops if it's tight. Let it do what it do. Let the market decide what it needs to do. You just want to be in it when it does it, and you want to be on the right side of it, and that's what this is designed to do. All right, the next one, diamonds, Dow Jones, ticker symbol DIA. Intraday looking to go long at 107.18 with a stop loss of 106.34. And we do see this one now is in a bona fide uptrend. Believe it or not, the Dow is showing that it wants to be in an uptrend and wants to start a new leg up. Regardless of what we think about fundamentals, remember, we have to trade the markets. Whatever the markets are telling us, we have to do it, whether it makes sense or not. Always remember, you're not smarter than the market. The market is the leader. It tells you what to do. I don't care how you want to spin it. Dumb money, smart money, banks controlling it, Federal Reserve, whatever. All that may be well and good and may be true, but it's irrelevant. You just want to be on the right side of the market. Do not think for a moment that if they want to, the powers that be can collapse any market, and all of the markets simultaneously if they wanted to. Please hear me when I say this. They can crash all the stocks, all the commodities, gold and silver included, if they want to. I've done videos, several videos, showing you this year alone on several occasions where stocks were crashing, commodities were crashing, bonds were crashing, the dollar was crashing, foreign currencies against the dollar was crashing, gold and silver also crashing. I've done videos showing you, documenting that in real time with the markets moving, showing you how they were all crashing simultaneously. Every market around the globe. So don't think for a minute that they can't do that. Don't think that the Dow can't go to 15,000 if they wanted to. You have no idea. A lot of you guys are new. You're rookies. You're new jack. You don't know any better. I'm trying to school you. You weren't around in the go-go 90s. If you didn't have a trading account, if you wasn't trading in the 90s, you have no idea what I'm talking about. If you didn't trade prior to 2002, you have no idea what I'm talking about. You have no idea. Like I said in my last video, you ain't seen volatility. This is not volatility. These markets are not volatile. These are the easiest markets I've ever traded in my life as far as extracting money from the market. I repeat, easiest markets I've ever seen to take money out of. All right, we're not dealing with $15 daily ranges in the diamonds today. We're just dealing with barely a buck range. All right, so that's not a lot. But don't think for an instant that they can't do a May the 6th on you and drive these markets insane. Yeah, they can. Do we care about that? Heck no. Because we use stops so that we are protected. And like I explained to you guys before, we enter the market on stop limits and we exit the market on stop limits. I know that some other markets don't accept that, like some of your futures. You have to use a stop. That's cool, because that's why I say, you like to manage your positions and stuff. The bottom line is getting on the right side of the market. So if you're trading futures and they go lock limit on you, who cares? You're on the right side of the market. Or if you're trading like the diamonds intraday and they do a May the 6th, you just want to be on the right side of it. Remember, a parabolic move can move in your favor if you're on the right side of the market. Always remember that. We're not afraid of parabolic moves. We're not afraid of, the stuff hitting the fan scenario. We just want to be on the right side of the market. We thrive off of calamity as traders. We do. We thrive off calamity. Floods, earthquakes, all that stuff, it's all good for us. Famine, whatever. We thrive in good markets, in good times, in go-go years, and we thrive when it's bad. Do not make for one mistake, for one moment, that millionaires weren't created in the Depression. Yes, they were. People made tons of money. In a crashing market, people can get paid. You can make more in a crashing market than you do in a bull market. I should know. I've done videos explaining that to you before too. All right, moving right along. See, you got me monologuing. All right, you're looking at the euro-dollar pair, currency pair. This one is a short at 131.26 with a stop at 132.43. This one's showing that it's downtrend consolidated. So we have hit a nice retracement run on this one, but it looks like it may be running out of steam and ready to reverse as the dollar begins to strengthen from its pullback. British pound, same story, except for the trend. This one's in a full uptrend. And then you see here the going long at 159.67 with a stop at 158.51. It's still bona fide uptrend. All right, so we still are anticipating another pulse wave. We think this one wants to push well into the 60s, the 160s. So we'll have to wait and see. Goldman Sachs is on the list today, buying at 157.46 with a stop at 152.78. We showed that Goldman Sachs now is in a bona fide uptrend. Remember, I did a video some time back showing where Goldman Sachs sometimes leads the Dow, the S&P, and the NASDAQ for whatever reason. Well, follow the money. If Goldman Sachs is rallying, you want to be rallying too. Regardless of what you think about Goldman Sachs, how you feel about Goldman Sachs, if you think Goldman Sachs is the devil, great. But you need to be long today in Goldman Sachs. Bottom line, if Goldman Sachs is rallying, you need to be long Goldman Sachs. I can't say any clearer than that. I don't care, like I said, if you think they're the devil, it doesn't matter. We trade these markets. We don't care about the emotional part of it. All right, moving on. Moving at New Zealand dollar, looking at the Kiwi here. This is going long at 73.58 with a stop at 72.94. We show this one in a bona fide uptrend as well. All right, the next one is the QQQ. I always say QQQ because I don't like saying QQQQ. It used to be called the QQQ or the cubes or the Q. Now they've changed it to QQQQ, and I just don't like it. It doesn't roll off my tongue the same way. So trading the triple Q, we're going along at 47.01 with the stop at 46.47. This one is showing bona fide uptrend too. The NASDAQ, contrary to popular opinion, and I know other traders can debate this with me all day long, I see the NASDAQ as the leader of the pair. The NASDAQ leads the S&P and the Dow. Always. Always, always, always. Some people will argue that the Dow transportation average is the leader. I say it's not. Because remember, when the S&P and the Dow were hitting new highs in 2007, the NASDAQ was not. The NASDAQ was telling the story for a year and a half that the rally was fake and was coming to an end. I wasn't on YouTube then, so you didn't get to hear me talk about that and warn about that. Oh well, you hear me now. Okay. TLT, looking at the bonds. We have a buy on the bonds. 99.55 with a stop at 98.51, and we also showed that it's in an uptrend. One note here. Oh, and we showed that we're anticipating a pulse wave. You heard me do videos before saying that I believe that they are going to do everything in their power to keep bonds expensive because they need to keep the rates down. I still believe that. Regardless of how you feel about correlations and things like that, the bonds and the stock market haven't been correlated very well for a long time, for years. It used to be you could set your watch by it. I mean, I could literally sit there and pick it off. If stocks were down, I could literally just go in and start buying the 30-year bond futures and stuff, and just sit there and just make money all day long. But that correlation started breaking down back in the mid 2000s, and so now it is what it is. All right. We don't even pay attention to correlations anymore. Correlation, smormation, it doesn't matter. They don't care anymore. And so we don't. We'll buy everything up at the same time and short everything at the same time if we have to. Moving on. The dollar yen, we have a sell on this one. We're showing that it's moving in the way of BP. Stuck in the Kumo, doesn't know which way it wants to break out. Oh, sorry, no, it's not. It's in a downtrend. I didn't see that. It's in a downtrend here. So it broke out of the Kumo, but it's in a full-fledged downtrend now. However, We think there's more to go, even though we don't have a pulse wave projection. So this one, I would say still watch your money intraday on this one, but I still like to trade. All right, next one. Looking at the USO, United States Oil Fund. On this one here, we have a long, and it's in the uptrend, as you can see here. We're going to buy it at 37.16 with a stop at 36.58. And last but not least, the Dow Jones Industrial Average, taking advantage of the mini Dow futures, ticker symbol YM, long at 10,706.76 with a stop at 10,623.75. Show it also is in an uptrend. That's pretty much it, you guys. Remember what I said. Take what you can and give nothing back.